You know that little card in your wallet, the one with the Visa logo? Well, that's just the tip of the iceberg for a global giant that processes trillions of dollars every single year. And a few times a year, that giant has to show the world its report card. So how'd they do?
You see the headlines, right? The stock market goes a little crazy, but what are these reports actually telling us? Honestly, it can feel like trying to read a whole different language, just full of jargon and these mind-numbing numbers. But what if we just looked at it differently? Not as some dense financial document, but more like a simple report card. It tells us where the company is absolutely crushing it, where it might be facing challenges, and what its big plans are for the future. So yeah, let's decode this thing together.
At its heart, this is all an earnings report really is. It's the official breakdown of how much money a company made, how much it spent, and what was left over at the end of the day. You could think of it as the ultimate financial checkup. So what's the first big number on this report card? Well, for the full 2025 fiscal year, Visa brought in a whopping $40 billion in net revenue. That's the money coming in from all those little transaction fees before you subtract the big expenses. It's just a staggering number that shows you the sheer scale of their global reach. But here's what's really interesting. It's not just the size of the number, it's the growth. That's an 11% jump from the year before. You know, in a world full of economic uncertainty, seeing a company this massive grow that fast, that's a really powerful signal that people are still out there spending money.
And this is the engine that drives all that revenue. 257.5 billion individual transactions. Just think about that. Every single swipe, tap, or online click with a Visa card adds up to this absolute mountain of data and dollars. It's like a direct window into what the entire world is buying.
So where exactly is all this growth coming from? Well, it pretty much breaks down into three key areas. First up, payments volume is up 8%. That's the total dollar amount being spent. Second, and this is a big one, cross-border volume is up 13%, which is a great sign that international travel and shopping are bouncing back. And finally, the sheer number of processed transactions is up 10%. So to put it simply, we're spending more, we're traveling more, and we're swiping more.
Okay, so this is where the report card gets a little more interesting. We've seen the revenue, and that's pretty straightforward. But when we look at profit, the money that's left after all the bills are paid, Visa's report actually gives us two very different numbers. So on one side, you've got the official story, which uses the official accounting rulebook, called GAAP. That number is $20.1 billion. But then on the other side, Visa also shows us an adjusted story, a non-GAAP number, that comes in at $22.5 billion. So what's going on? Where did that extra $2.4 billion go?
And here's our answer. A $2.5 billion line item set aside for ongoing legal stuff. Now, this is a huge one-time expense, but it's not really part of their normal day-to-day business. And that's exactly why companies show investors both numbers, the official profit with that legal charge and the adjusted profit without it, just to give a clearer picture of how the core business is actually doing.
And this chart really puts it all in perspective, doesn't it? You can literally see how that one-time legal charge pulls down the official profit. By looking at both bars, you get a much richer story of the company's performance. The bar on the left is the reality by the book, but the one on the right? That might be a better signal of the company's true ongoing profitability.
Now, when a company is this profitable, it has choices about what to do with all that cash. It can pour it back into the business, or it can return it to its owners, the shareholders. In 2025, Visa returned a massive $22.8 billion to its investors. But how exactly did they do that? The breakdown is actually pretty clear. The vast majority of it, about 80%, was used for something called share repurchases. That's when a company buys its own stock off the market, which makes the shares that are left more valuable. The other 20% was paid out as dividends, which are basically like direct cash thank you notes sent to shareholders for owning a piece of the company.
So why does any of this matter if you're not a Wall Street analyst? Well, it's because Visa sits right at the heart of the global economy. When their cross-border numbers are growing, that's a really good sign that international travel and trade are healthy. And when their overall payment volume is up, it generally means consumers are feeling confident enough to spend. But this report isn't just about looking backward. It's also a peek into the future. And Visa's CEO tells us exactly where they're headed. Listen to the words he's using. He's not talking about plastic cards. He's talking about AI, real-time payments, and digital currencies. This tells you they don't just see themselves as a credit card company anymore, but as a technology company that's building the next generation of commerce. All right, so let's boil it all down. What are the key grades on Visa's 2025 report card? First, they saw strong growth pretty much across the board. Second, that rebound in international spending is a fantastic sign for the global economy. Third, the real story behind their profit is actually even stronger than the official numbers might make you think. And finally, Visa is betting big on the future, on things like AI and digital currencies.
Which, of course, leaves us with one final massive question. Visa built an absolute empire on plastic cards and a network that spans the globe. But as money becomes pure data, flowing instantly through AI-powered apps and blockchain networks, can their dominance last, or is the door finally opening for a new generation of companies to challenge the giant?